Good evening, this is Giuseppe Basile. I'm the analyst and trader you can find at the blog Fibonaccistalking.com. I also post regularly on Twitter using the @Fibstalker nickname. Good evening, today is January the 6th, Sunday, January the 6th, 2013, and this is my Fibstalker view on currencies. This is part of the newsletter I distribute freely to my subscribers. In this Fibstalker view on currencies, what I do, I usually make a review of the dollar index and then a review for pairs: the pound versus the US dollar, the Aussie versus the US dollar versus the Canadian dollar, and the US dollar versus the Japanese yen. So let's start from the dollar index here. What you see on the screen is the daily chart of the dollar index continuous contract aligned to the March 13 expiration. Those who follow me will remember that I have indicated the level of resistance on the wider weekly time frame here, which we can actually see on the daily chart as well, and this level of resistance is the 8403, having a target below the recent lows at 75. Now, in the last few months we have been looking at the bottoming process of the euro, which corresponded to a topping process of the dollar index, and the dollar index found resistance 8160. We were able to spot this top here, and we started a move lower. We had these spikes higher, but the most important, the recent development is this move that started in correspondence to the fiscal cliff resolution, or I would say issue, because I believe the fiscal cliff is not managed so far just yet. So this reaction of the dollar seems very fundamentally aligned with the problem of the fiscal cliff, because with automatic taxing increases and spending reduction, we had some more and more traders and professional traders and bank buying the dollar in the last few days and weeks. Now, it's important to understand whether it's really important to understand whether this move higher is going to be just an aberration of the dollar here, or if this is something in preparation of something of a continuation of this move. Now, we will need to understand whether the 8170 area will act as a resistance again, or if price will continue above 8141 if price continues higher, or whether this move higher will just expire here and price will start moving lower with the euro dollar start moving higher. So this is something we cannot say at the moment. If we looked at technicals, we would see that this 80.65 has been violated on the upside on Friday, and that means that now the dollar is in a confirmed sideways action, and when that happens we can actually reach the top level of the channel at 81.60. so that's what can happen. We also have this 20-day moving average here, sorry, 200-day moving average rather, that could provide some kind of resistance. So we will need to wait, and the dollar index is going to affect also the other pairs, as we're going to see. So let's move to the pound versus the US dollar. What you see on the screen is the weekly chart, and we know in this weekly chart that there is a trace that is providing support to price now since the end of 2011. It was tested 3 times here. That's the 152.70 area, and this area is a target in 178.80 area. Now, moving to the daily chart, we can actually see this huge move in the dollar that also spoiled somehow this chart, because what we can see here is that we had this trace from this level to the highs. We can actually use the bottom of this range here, and as we can see 158.40-50 area acted as support. Price never got into the 165.20, which was the target of this trade here, and also we in the last few weeks we observed these other trades, the 160.65 that traded to the pip here 2 weeks ago, and again this setup, well-formed setup, never got to 164.70. When the setups do not get to target, something fundamentally is changing or has changed, and that's the reaction to the fiscal cliff. Now we could argue here that the 160 level was defended by bulls, but I wouldn't trust this move until the situation in the dollar index is clear. So I can see a resistance here in the 161.90 and even in the 161.50. So those are the areas we have to take into consideration. If dollar strength continues, we can see price getting into 161.50 and then continue lower here. Moving into the Aussie dollar also has this long-term. So let's I want to see the weekly just yet. We have this long term that was already traced, this long term support here, providing support to price, and in 2011 and in 2012 to the pip here, and this trace as well as a target above in 117.80 area. And as you can see, is within this wedge at the moment, and the wedge is still is also providing resistance here, but that's not very important. We have to see how price reacts to resistance and support and our setups here. So as we can see here, the Aussie dollar on the daily chart is a little bit stronger. As we can see, it held support at 103.70 area, and we have target above in the 106.80-90 area here. Again, I wouldn't trust this move at the moment. I mean, it seems that this is providing support and price will go to 106.80, but I want to see again, I would like to see again how the dollar is going to behave here. If nothing changes and the dollar becomes weak again, then we can see this pair going higher, but I would wait at the moment. Moving to the US dollar versus the Canadian dollar, the weekly chart. On the other side, in the last few weeks we were looking at dollar weakness, and so we would actually consider this pair keep moving lower. And on the weekly chart you can see that we have this resistance in 104 area, and this is a target in 0.95-94. So if the dollar resumes weakness, that's where we should see the USD versus the Canadian dollar. So the Canadian dollar should appreciate against versus the US dollar. Now, going on the daily chart, we can actually see here a resistance level, an inner resistance level. We could make the case that this was defended, although there was a slight violation here. The 0.9970 area was very on the upside, but we had this spike on Friday, and if weakness in the dollar resumes, that the first level which should see this pair reaches 0.9780 area, and that would be the first target. Unfortunately, the behavior in the dollar index, in the dollar in general, skewed a little bit all these pairs, and they're not very technical at the moment, but eventually this situation will correct. I will go back to normal. That's not the case just yet, so there is a short bias in this pair, but I want to see the US dollar. The strengthening US dollar kept pushing the US dollar versus Japanese yen pair on the upside. That was a process that was already in place, and it can be seen very clearly on the daily chart. I've been saying that this pair could keep moving higher, and that's what happened. And we had this 81.70. It was one of the setup that I suggested on my Fibstalker view on currencies. We hit the first target in 83.40 and then 84.20, and the pair kept moving higher. So as we can see, we had this new setup here with a target in 85 and 85.70 with a support in 83.80. And just this pair kept moving in extensions. So again we had another support in 85.70 with a first target in 87 and 87.80. Now the next setup, if we follow this logic and if this pair keeps moving in extensions, we should get a support in 87.50, and this would then provide us targets above. So 87.50, 87.60 is going to be the next support level with a stop below 87.20. Now I want to notice here, what's important to notice that the Japanese yen was already going lower. I mean, it's like the Japanese central bank was printing money faster than the Americans were doing. So this process was already ongoing. Now with dollar strength, this process is still more extreme, so we should see 87.50 hold. On the other side, we also have to understand that at some point the sequence of measure move extensions measure move will fail, and we will see a larger retracement, and that larger retracement will come, you have to keep this in mind, will come with a support into the 86.20 area. So that's the next level of support we will see. That's it. I hope this is interesting. If you want to receive this update timely, you can subscribe my newsletter. Go to fibonaccisolking.com. On the left side you'll find a picture and you can subscribe there. And I will send this info. I will push this information on my blog with a 6-8 days delay. So if you want to receive this information timely, just subscribe my free newsletter. Thank you very much for your attention. I wish you a very good trading week, and all the best. Bye bye.